Hello everyone, you're welcome back. It's TECHRIZ here, and I'll be your friend, your host, and your tutor. And in this video, we'll be talking about entry models, right? Entry models, right? Or will I say popular? We call it popular patterns. So entry models are basically like the SMC version of like chat patterns, right? So when you hear chat patterns, we know that there are what? There are formations, there are shapes, there are candle build-ups that we've seen in the past do something, and we expect that in the future it's going to also do the same thing. Just like I explained before, like I said, let's see now, something like this happens. We saw something like this, we saw something like this in the past, right? Let's call this a penance, because pretty price came from here, did something like this in the past too, and then price broke out and did something like this before moving up. Now this happened in the past, and then we realized that okay, this formed this, and this also formed this. So you can say, okay, what name can we give it? Let's say a bullish pennant. Now this hand has now become a pattern, right? Now in the future, if we see price do something like this again, right? We see price do something like this. Okay, it now starts becoming clear. People that okay, I've seen this before in the past. Let's see what's going to happen. And you know that always when a pattern forms, there's going to be a breakout and there's going to be a retest. Now, the most probable place to take your trades is from the retest after the breakout. Now, a trader will be like, I've seen this pattern before. Price coming from the downside, build up with an accumulation and break upwards, right? Now, we can say, okay, wow, a bullish pennant based on the name they gave this one is about to play out again. And when it breaks out, take our trading opportunities from here and boom, we buy. Right? So that is just basically what entry models and patterns are. Right? That's what entry models and patterns are. So, an entry model is like some certain formations we can see candles do that gives us like a periphery of like what we should expect the market to do, right? There are some certain things, there's some certain way the candles will line up, right? There are some certain ways that the candle will line up, like there's how they will arrange themselves, and then we'll be like, okay, it's arranging itself like this, like this. I can see this, I can see that, and this is what's going to happen. These are patterns that has been tested and trusted. Patterns that have been what tested and trusted. Patterns that have been what tested and trusted. Right? Tested and trusted. So let's proceed. Now, the first on my list is the inverse head and shoulder. Now, this pattern is a very prominent one because I used this pattern to make a lot of money from gold at one time when gold price action was very bullish. It's on my YouTube channel and you can actually go and watch if you want to actually watch more. The video tagged, I made so and so amounts from this particular entry model. I call it 100% win entry model because like it happens when it happens, right? And there are two ways you can actually trade this particular entry model I want to describe for you. Pay rapt attention. Now, um, let's say we have a price action. It can act as a reversal pattern, right? Let's say we have a key level, right? A key level is a higher time frame demand, right? A key level is a higher time frame demand, and this is for people who actually these entry models can also serve as confirmations for you as well, right? Although there's going to be a little different video on confirmations, right? But this video now can also serve, entry models can serve as confirmations for you that okay, yes, price is indeed what's bullish or price is indeed bearish. Now let's say we have a high time frame key level and price came into it. How do we know for sure that okay, this key level is going to hold price, right? Now there are certain entry patterns or entry models that will form on this particular key level, and we will know that okay, yes, this has formed, that has formed, everything lines up, and then we take our trades, right? So this one is the inverse head and shoulder pattern. Now price will come into the demand and bounce off, creating some sort of like a bounce, right? And then people who actually what set BEs, price will come back to take liquidity of this level, right? Deep into the demand a bit, and then buy back. Now, when this happens, price is going to create another leg. Now this is the third attempt on this level. Now this is the third attempt. There's actually a rule that states that when price breaks through this level, that particular previous low, hey Siri, turn on do not disturb. Notifications are a lot every day. So as a particular thank you. There's a particular rule that says that particular level that price took out, price will come back to mitigate it, and that's like the primary logic behind this pattern. Now price will come back for the third time, very close to where this one is. Tap on it, or probably a zone here. Tap on it, bounce and break off. Now when this break is what's established, now this is the first place you can take your entries from, right? The first place you can take your entries from is anywhere around here, anywhere in this demand zone. Any unmitigated block in this demand zone is where you can actually take your entries from. Your entry can be from here, can be from here. Maybe there's an unmitigated demand zone here. You can take your entries from there, and boom, you go off. Right? And that's not just it. That's not just all. When this has happened, you can also take your entries from here. Note the two differences. When you're trying to take off the right shoulder, you're constraining the entire demand zone. But when you're trying to take off the mitigation of the right shoulder, you're going to take what's from the mitigation itself, right? From the mitigation itself, that's where you're going to take your entries from. Now, price to come back here, third time, and then boom, finally move. So this is a very, very interesting entry model that you definitely don't want to even miss out on, right? So that is one. Inverted and shoulder. I have another one like this. This one is like the inducement type of entry model, where we have like an incomplete pullback acting as an inducement. And if you check AUD card as at today, you're going to see this particular one I want to draw playing out. Now we'll have like we'll have our high. Okay, let's say we have like our high. So but before, okay, you have our high. So we have a very small, not that's more like an EPA type 2 happen somewhere like this, and price will go back, break up, and then price comes down back into this zone, this unmitigated zone, and then price buys. This one is also very popular. I'm not going to be going in the chat to show you this is your assignment. Go and find them, look through price action, find them, just draw them down in your charts, find them. One thing is sure, you're not going to go wrong with any of these entry models. Now this is another one too. Now note the differences. This one has broken. This one is a bit too high. Perfect. Now this is another one. This is the most popular one, I guess. This one is like this. We have our what? We have like our sweep, right? Sweep, and then we have the break, a very tiny break, or more like a sweep as well. When the sweep or the break happens, price will dip back in, creates an inducement, break again, and then what happens? Price comes down into this zone and then buy. This one is a very popular entry model, very popular one. Sweep, break, inducement, SBI, what they call SBI on this piece. Everybody's shouting SBI like it's one very big thing. Alright, so this is another one too that looks very similar, but you should also pay attention. Okay, so this is one sweep. We have a break, then we have like price would actually even come down very close to the demand zone, very close, and then price will expand, right? Price will expand. Now if price is coming back here, price is not going to take from the expansion. No, price will not take anything from the expansion. Price will come back, take out this liquidity, because there has been a run off every form of liquidity here. Price will take off this liquidity, bounce into this zone, and boom, go up. I think this one happened on USD CHF. Somebody kept on asking a question on this, and like, why did you mark that block? Why did you keep marking that block? Why did you mark that block? And I'm like, well, there's some things the experience will teach you. So this is another one. Note that the difference between the only thing that makes this one different is what the expansion that happens here, right? That's the only thing that makes it different. The expansion that happens there. Okay, so and then the last one is the shifts, right? Everybody is very, very aware of the shifts, right? Shift is a very powerful entry model. We have the failure swing, then price breaks, not just this low, but this low, right? Before price comes back and then boom. So this particular one is also a very, very strong entry model. Right, so that is it for entry models. Go on your charts, look for all of them, spot as many as possible, watch videos like the system, how I was able to make 16k on good using this first entry model, and you're going to see how it actually is when you want to trade it in real life, because a lot of it happened on good during that period. And then some of the charts you might be seeing from people who post online, some of these things will start becoming clear to you. You now know why, okay, this person picks this zone, this person picked that zone, and all of that stuff, right? This particular one happened on AUDCAD current markets, AUDCAD current markets, and these are other beautiful price. This one happened on USDCHF, past price action. I posted this one. This is the one that BEI kept on asking, how did you get out? Why did you choose this zone? Why did you choose this zone when it looked like it had mitigated the second candle that was here? Yeah, so that's a wrap for entry models. Go on your chart and find them, practice as many as possible, and that's it. The thing about them is they're always very clear. When you see it, you see it. When you see it, you recognize it, right? And also another tip to trading these entry models is you can also trade them in association with whatever the higher time frame is telling you. So let's say you're seeing this particular bullish, and they all have bearish forms, right? If I just flip invert this scale, you can see their bearish form. So you can also draw down their bearish form as well. So, but yeah, like I was saying, if you see a bullish entry model very close to the supply, just leave it. If you don't know how to target appropriately, leave it and let it be. So I'm gonna use this time, okay, maybe in the next video talk about engineered liquidity. Just that engineered liquidity may be a very small, it's not really a huge thing. I don't really banter so much on it because like it's not it's not it's not a pressing thing, gang. It's a very, very minor thing. And yeah, we'll talk about that in the next video. Yeah, I'll see you guys in the next one. Take care.